before Visa and Mastercard. Imagine walking into a store, buying groceries, and then realizing you don't have enough cash. Today, that's hardly a problem. You simply tap your card or your phone, and within seconds, the payment is complete. It's so fast that we rarely stop to think about what just happened. But rewind the clock by more than 70 years, and the world looked completely different. There were no credit cards, no debit cards, no online shopping, no digital payments. Every purchase depended on one thing: cash. If you wanted to buy something expensive, you either carried a large amount of money or you didn't buy it at all. This created problems for both customers and businesses. Carrying cash was risky. It could be lost or stolen. For businesses, counting cash took time. Making change slowed down transactions, and expanding to customers in other cities became much harder. The world was growing rapidly after World War II. People were traveling more. Businesses were expanding. The economy was becoming increasingly connected, but the way people paid for things hadn't changed. A better solution was needed. Then, in 1949, a businessman named Frank McNamara walked into a restaurant in New York City. After finishing dinner, he reached for his wallet, only to discover he had forgotten it. Embarrassed, he had to call his wife to bring money and pay the bill. For many people, it would have been an embarrassing story to laugh about. But for Frank, it became an idea. He asked himself a simple question: what if people could carry one card instead of cash? One small mistake sparked one of the biggest financial revolutions in history. A year later, that idea became the Diners Club card, the world's first widely accepted charge card. For the first time, customers could eat at participating restaurants without carrying cash. At the end of the month, they would pay the full bill. It wasn't a credit card as we know it today, but it proved something important. People loved convenience. Businesses loved more customers. And the world realized the future of payments had arrived. Soon, banks noticed this growing opportunity. If one small card could change how people paid for dinner, imagine what banks could do on a national or even global scale. That realization would soon lead to two companies that would quietly build the payment networks powering billions of transactions every single day. Those companies were Visa and Mastercard. How Visa was born. The success of the Diners Club card sent a powerful message to the banking industry. People were ready for a new way to pay. But there was one major limitation. The Diners Club card could only be used at a limited number of restaurants and businesses. It wasn't designed for everyday shopping. Banks saw an opportunity much bigger than restaurant bills. They imagined a single payment card, accepted in stores, gas stations, hotels, and shops across the country. One bank decided to make that dream a reality. That bank was Bank of America. In 1958, the bank launched a revolutionary product called Bank AmeriCard. Unlike previous payment cards, this one allowed customers to borrow money and repay it over time. In other words, it introduced modern revolving credit. For millions of Americans, this was something completely new. People no longer had to save money for months before making a purchase. They could buy now and pay later. It changed consumer spending forever. But the launch was far from perfect. Instead of slowly testing the idea, Bank of America mailed more than 60,000 Bank AmeriCards to residents of Fresno, California. People hadn't even applied for them. The cards simply arrived in their mailboxes. At first, the experiment looked brilliant. People began using the cards immediately. Stores accepted them. Transactions increased. But within months, serious problems appeared. Fraud exploded. Some cards were stolen before reaching customers. Others were used irresponsibly. Many people failed to repay their balances. Banks lost millions of dollars. Critics declared the experiment a disaster. Many believed the idea of a universal bank card had failed, but Bank of America refused to give up. Instead of abandoning the project, it improved it. The bank strengthened security, created better approval systems, improved fraud detection, and educated customers about responsible credit use. Slowly, the losses began to decrease. Confidence returned. Other banks watched carefully. They realized something important. The idea wasn't broken. The system simply needed better management. As more banks joined, Bank American Card expanded beyond California. Soon, it spread across the United States, then across international markets. By the 1970s, Bank America N officially became Visa. The name was simple, easy to pronounce, recognized in almost every language, and perfectly suited for a company with worldwide ambitions. Visa wasn't trying to become just another financial company. Wanted to become the invisible network connecting banks, businesses, and customers across the globe. The foundation had been built. But Visa's journey to global dominance was only beginning, because another ambitious competitor was preparing to challenge its leadership. That competitor would soon become known as Mastercard. Mastercard fights back. Visa was growing rapidly. More banks joined its network. More stores accepted its cards, and more customers embraced the convenience of paying without cash. To many people, it looked like Visa had already won. But behind the scenes, other banks were becoming increasingly worried. If Bank of America's network became too powerful, one company could dominate the future of payments. They needed another option, not controlled by a single bank, but built together. So in 1966, a group of banks came together with one mission: create a competitor strong enough to challenge Visa. They formed an organization called the Interbank Card Association, or ICA. Instead of competing against each other, these banks decided to cooperate. It was an unusual strategy. By sharing one payment network, every participating bank could issue cards under the same system while still serving its own customers. Soon, the organization launched a new payment card called MasterCharge. The name reflected its ambition to become the master payment card accepted everywhere. The battle had officially begun. Visa and MasterCharge weren't selling products. They were competing for trust. Every new bank that joined one network was a bank the other network couldn't easily win back. Every new merchant accepting one card made that network more valuable. This created something economists call the network effect. The more people used a payment network, the more attractive it became for businesses. And the more businesses accepted it, the more customers wanted to use it. Success attracted more success. Both companies raced to expand across the United States. Soon, their competition spread across Europe, Asia, Latin America, and eventually, almost every corner of the world. But MasterCharge had another challenge. Its name felt outdated. As the company expanded internationally, it needed a brand that was simpler, stronger, and easier to recognize. In 1979, MasterCharge officially changed its name to Mastercard. The new name was modern, global, and memorable. The famous red and yellow overlapping circles became one of the most recognizable logos in the world. By now, the competition between Visa and Mastercard had become much bigger than two companies. It was a race to build the world's payment infrastructure. Banks were choosing sides. Businesses were upgrading payment systems. Consumers were carrying plastic cards instead of stacks of cash. Without realizing it, the world was quietly changing the way money moved. And the biggest transformation was still ahead. Because soon, computers, the internet, and digital technology would completely redefine how people paid for everything. The race to build the world's largest payment network. By the early 1980s, the battle between Visa and Mastercard had entered a completely new phase. It was no longer about issuing more cards. It was about building something far more valuable. A network. Think about it for a moment. A payment card is useless if no store accepts it, and a store has no reason to accept a card if no customers use it. Visa and Mastercard understood this simple truth better than anyone. The company with the biggest network would eventually become the most powerful. So they began connecting the world, one bank at a time, one merchant at a time, one country at a time. Soon, banks across Europe joined, then Asia, South America, Australia, the Middle East, Africa. Within a few decades, their payment networks stretched across almost every country on Earth. Millions of businesses installed card terminals, hotels accepted international payments, airlines processed bookings instantly, tourists could travel thousands of miles and still pay using the same card. For the first time in history, money could move across borders almost instantly, without carrying stacks of cash, without exchanging large amounts of currency by hand. It completely changed international commerce. Businesses expanded faster. Tourism increased. Online shopping became possible. Global trade accelerated, but building a worldwide payment network wasn't easy. Every transaction had to be completed in just a few seconds. Every payment had to be secure. Every bank had to trust the system. That required enormous investments in technology. Visa and Mastercard built highly advanced computer networks capable of processing thousands, then millions, and eventually tens of thousands of transactions every second. If you bought coffee in Tokyo, someone booked a hotel in Paris, and another person paid for groceries in New York, their payments could all be verified almost instantly. Behind every transaction, thousands of computers communicated with each other, checking balances, preventing fraud, confirming approvals, moving information across continents in just moments. Most people never noticed, because when the system worked, it felt invisible, and that was exactly the goal. The easier a payment became, the less people thought about the technology behind it. By the 1990s, Visa and Mastercard had become far more than payment companies. They had become part of the world's financial infrastructure. Banks depended on them. Retailers depended on them. Travel companies depended on them. Even governments relied on their networks. But then, a new invention appeared, one that would completely transform the way people spent money. The internet. And with it, a brand new economy was born. Online shopping. Digital businesses, global e-commerce. Suddenly, Visa and Mastercard weren't just connecting stores, they were connecting the entire digital world, and their greatest opportunity was only just beginning. How Visa and Mastercard make billions without lending you money. Here's a surprising fact. Most people believe Visa and Mastercard are banks, but they aren't. They don't keep your savings. They don't approve most loans. They don't decide your credit card limit, and they don't lend you the money you spend. So here's the real question. If they don't lend money, how do they make billions of dollars every year? The answer lies in something almost invisible. Every time you swipe, tap, or enter your card details online, a complex journey begins. Let's imagine you're buying a laptop for $1,000. You tap your Visa or Mastercard. Within seconds, your payment travels through an invisible digital highway. First, the store sends the payment request to its bank. That bank is called the acquiring bank. The acquiring bank then forwards the request through the Visa or Mastercard network. Visa or Mastercard doesn't decide whether to approve the payment. Instead, they act like a super-fast messenger. The request is sent to your bank, known as the issuing bank. Your bank checks several things. Do you have enough money? Is your card active? Is the transaction suspicious? If everything looks correct, your bank sends back one simple message: approved. Within just a few seconds, the store receives confirmation. You walk away with your purchase. The payment feels effortless. But behind that simple tap, hundreds of systems have worked together almost instantly. Now comes the important part. Every transaction includes small fees, usually only a tiny percentage of the purchase amount. Most people never notice them. The merchant pays these fees as part of accepting card payments. Those fees are divided among different companies. A portion goes to the issuing bank. Another portion goes to the acquiring bank. And Visa or Mastercard receive a network processing fee for securely moving the transaction through their payment system. That fee may seem tiny, sometimes just a few cents. But now imagine, not one payment, not 1,000, not 1 million. Imagine billions of transactions happening every single day across the world. Coffee, groceries, flights, hotels, online shopping, streaming subscriptions, restaurants, gas stations. Every small fee adds up, day after day, year after year. This is why Visa and Mastercard don't need to lend money to become incredibly profitable. Their business model is built on scale. The more the world spends, the more transactions flow through their networks, and the more revenue they generate. It's one of the most powerful business models ever created. Because instead of owning the money, they built the roads that money travels on. Think of it like a highway. Cars don't pay the highway because the highway owns the cars. They pay because the highway makes the journey possible. Visa and Mastercard work the same way. They don't own your money. They built the infrastructure that helps move it safely, quickly, and reliably across the world. As cash slowly disappeared and digital payments exploded, their networks became more valuable than ever before. But another revolution was just beginning. People were starting to leave their wallets at home. Instead of plastic cards, they were paying with their phones. The digital payment revolution. The world had entered a new era. The internet was growing rapidly. People were no longer shopping only in stores. They were buying books, clothes, electronics, and even groceries, without ever leaving their homes. This created a completely new challenge. How do you make a payment when there's no cashier, no cash register, and no physical card reader? The answer was digital payments. Visa and Mastercard quickly adapted. Their payment networks expanded beyond stores into websites, mobile apps, subscription services, and online marketplaces. Every time someone clicked Pay Now, their networks quietly went to work, approving transactions, detecting fraud, moving money across continents in just seconds. Then, another revolution arrived. The smartphone. Suddenly, your wallet no longer needed to stay in your pocket. It could live inside your phone. Companies like Apple, Google, and Samsung introduced digital wallets. Apple Pay, Google Pay, Samsung Wallet. With just a tap, people could pay using their phones or even their smartwatches. Many believed these companies would replace Visa and Mastercard. But something interesting happened. Instead of replacing them, they partnered with them. When you tap your phone using Apple Pay or Google Pay, in most cases, the payment still travels through the Visa or Mastercard network. The phone simply replaces the plastic card. The invisible payment highway remains the same. This was another brilliant example of adaptation rather than fighting new technology. Visa and Mastercard embraced it. Their networks became the foundation for the next generation of payments, but convenience also brought new risks. As digital payments increased, so did cybercrime. Hackers. Identity theft. Card fraud. Billions of dollars were at risk every year. To stay ahead, Visa and Mastercard invested billions in security. Advanced encryption. AI-powered fraud detection. Real-time monitoring. Tokenization. A technology that replaces your actual card number with a unique digital token during transactions. Even if hackers intercepted the payment, they couldn't access your real card details. Today, artificial intelligence analyzes millions of transactions every second. Looking for unusual patterns. A purchase in London, followed by another in Tokyo. Just minutes later, could trigger an instant fraud alert. Most of this happens automatically, without you ever noticing. That's the goal. The safest payment is the one you never have to think about. By combining speed, security, and global acceptance, Visa and Mastercard became even more important in the smartphone era. Every new payment technology, from mobile wallets to contactless cards to wearable devices, made their networks stronger, because no matter how you choose to pay, someone still has to move the money. And for billions of transactions every single day, that job belongs to Visa and Mastercard. But even after decades of success, one question remains. If both companies offer similar services, why do they continue competing so fiercely? And who is actually winning the battle? That brings us to one of the biggest business rivalries in modern finance. Visa versus Mastercard. Visa versus Mastercard. Who is really winning? For decades, Visa and Mastercard have competed for the same goal, to become the world's most trusted payment network. Millions of people carry both cards in their wallets. Many believe one company is simply better than the other. But the truth is much more interesting. If you look closely, their business models are almost identical. Neither company is a bank. Neither company lends most of the money you spend. Instead, they build the invisible networks that connect banks, businesses, and customers. So, if they do almost the same thing, why does the competition continue? The answer is simple. Scale. Every new bank that joins their network. Every new merchant that accepts their cards. Every new country they enter makes the network even stronger. This creates one of the most powerful business advantages in the world, the network effect. Imagine a social media platform. If only 10 people use it, it isn't very valuable, but when billions of people join, everyone wants to be part of it. Visa and Mastercard work exactly the same way. The more merchants accept their cards, the more customers want them, and the more customers carry them, the more businesses feel they must accept them. It's a cycle that keeps growing stronger. Today, Visa processes slightly more payment volume globally. It has one of the largest payment networks ever built. Mastercard, while smaller, has focused heavily on innovation, artificial intelligence, cybersecurity, digital identity, cross-border payments. Both companies continue investing billions of dollars every year, not because they're losing, but because technology never stops changing. The future of payments isn't just about plastic cards anymore. It's about smartphones, smartwatches, online shopping, digital wallets, and perhaps one day, even payments made entirely through artificial intelligence. The competition between Visa and Mastercard isn't about defeating each other. It's about staying relevant. In a world that's changing faster than ever, and while they compete fiercely, together, they process trillions of dollars every year, powering economies, helping businesses grow, and making modern commerce possible, without most people ever noticing they exist. The lessons hidden inside. Every payment, every time you tap your card, buy something online, or pay with your phone, you're witnessing one of the greatest business models ever created. Not because Visa and Mastercard sell products, but because they built the roads that connect the global economy. Their story isn't just about finance, it's about vision, innovation, and understanding how the future works before everyone else. So, what can entrepreneurs, business owners, and future leaders learn from them? Lesson 1. Own the network, not just the product. Most companies compete by creating better products. Visa and Mastercard did something different. They built a network. A network becomes more valuable every time someone joins it. The more banks connected, the more merchants accepted it, the more customers used it. Growth created even more growth. Sometimes, the greatest business isn't the one selling the product. It's the one connecting everyone else. Lesson 2. Partnerships can be more powerful than competition. Visa didn't try to become every bank. Mastercard didn't open thousands of branches. Instead, they partnered with banks around the world. This allowed them to grow faster than they ever could alone. Great businesses understand that success isn't always about doing everything yourself. Sometimes, the smartest strategy is helping others succeed. Lesson 3. Adapt before you have to. The world changed. Cash became cards. Cards became smartphones. Smartphones became digital wallets. Visa and Mastercard didn't fight these changes. They embraced them. Every technological shift became another opportunity. Businesses that refuse to change eventually disappear. Businesses that adapt continue to lead. Lesson 4. Trust is the most valuable currency. People don't think twice before tapping a card. Why? Because they trust the system. That trust wasn't built overnight. It took decades of investing in security, reliability, and technology. In business, trust is earned one transaction at a time, and once lost, it's incredibly difficult to recover. Lesson 5. The best businesses become invisible. Think about the last time you bought coffee or ordered food online. Did you think about Visa? Did you think about Mastercard? Probably not. And that's exactly why they've succeeded. The best infrastructure works so well that people forget it exists. The easier something becomes, the more people use it. That's the true definition of great innovation. Today, more than billions of transactions move through payment networks every single day. Across countries, across currencies, across continents, most of us simply tap, swipe, or click, without ever wondering what happens behind the scenes. But hidden beneath every payment is one of the greatest business stories ever told. A story of competition, innovation, partnership, and a vision that transformed how the entire world moves money. Visa and Mastercard didn't become powerful because they owned the money. They became powerful because they built the bridges that connect it. And in business, the companies that build the bridges often become more valuable than the ones crossing them. The next time you take out your wallet or tap your phone to pay, take a closer look. You're not just making a purchase. You're using a system that quietly powers the global economy. Because behind every great company is one decision that changed everything. This is Mr. Finspire, where business becomes a story.